Hi there, Serial Trader here. Just want to do an update on the major indices. And from the last video, we were working that nice three-wave decline, looking for a reaction potentially off that equality level. And it doesn't get much better than that as far as playing out according to the plan. And right around that 27.39 area, of course, we stabbed through a little bit there intraday, but largely reacted off that area and came up quite strongly from there. So I'm going to clean this chart up a bit. We don't need all these subdivisions anymore. I'll just leave the larger degree ABC labels in place, and other than that, leave it more clean. All right. So what are we working now? Well, let me zoom out to the daily here for a moment. And I'm just going to focus on, this December low as far as this wave count, because I don't want to get into the larger macro wave count and, how this all fits together. I just want to focus on, we have an important low. We have a 5-wave sequence off of that low that made a new high. Okay, new all-time high, in fact. And now we've had a clear 3-wave decline, a nice ABC zigzag decline, which also happened to come into the previous 4th wave of 1 lesser degree of that impulse wave up. So that's a nice target if you're still going to have a progressing impulsive wave to the upside. When you have a correction, going back to that previous 4th wave is a fairly typical area to go back to. And that also lined up roughly with the equality relationship between A and C here on the zigzag, and also happened to line up nicely with this 38.2% retracement of the overall move up from the December lows. So a nice confluence there to get a reaction, and we've certainly had a good reaction there. But the question is, can it just be as simple as 5 up for 1, ABC down for 2, and now we're already heading up in a wave 3 of potentially a larger wave 5? Certainly possible. Now it's important because we do have this 3-wave decline. So that tells you that however this correction, whether it's done here or if it's still playing out, materializes, the underlying message is that once we start trending again, we are going to do another impulse wave up and make new highs. So that's almost assured at this point, or I should say all but assured. Classic 5 up, 3 down, looking for another 5 up, right? But where it gets a little tricky is how we get there. Now, the easiest, simplest way is just to go, all right, we got our impulse wave up, we've got our 3-wave decline, and now we're just starting the next impulse wave up. And that's certainly potentially in play here, but I want to lay out some other scenarios. So on this daily chart, and just let me get rid of this. We don't need that 1618 there anymore. Okay. So we could have something like this. This is definitely an ABC down, but is it ABC down and done for 2? Or, and let's just go with this. Do we have ABC down for W? We're doing an X wave, and then we have another ABC down for Y to lower lows, and then we're done wave 2, and then we go up in the next wave up to make new highs. That's possible, right? Something like that. Double zigzag. Definitely possible. Can't rule it out here. You could rule out the double zigzag if we actually go up and meet or exceed the old high. And that's in the 2950 something area. So that's one scenario. Double zigzag potential. Another scenario is, okay, we have ABC down for A. We're going to have an ABC up for B. And then we'll have a five wave sequence down for C. Okay, and just let me draw this out here. So we'd have an ABC up. Drop the degree down 1 on that. And this would also have to be dropped down. So we have 3 down for A. We'd have a 3 up for B. Basically, if this was a flat, you'd be looking for roughly a double top, or if an expanded flat, you'd even exceed the high possibly, but it would be in a distinctive 3-wave sequence that you would do that. and you'd be coming down in 5 waves to basically make a double bottom or exceed the bottom if it's an expanded flat, right? So that's a scenario that we could have an expanded flat or a flat or even a running flat, although those are less typical. Okay, now I'll erase that. And another scenario is that we could do some sort of triangle sequence. And I mean, I'm not going to illustrate every single pattern or variation of a pattern because that would take too long. But the point is, there are some options here how we develop in this correction, aside from us actually just being done the correction here, potentially. And this is still potentially the right way to look at it. But just not to be an unabashed bull here, knowing that, you know, even if we break the high, if we just marginally break the high and start backing off again, well, maybe we're in that flat scenario, right? And we still need to come down one more time. But overall, looking higher. Now, this is probably the simplest way of looking at it. ABC down for 2 and done. We're maybe doing our initial wave 1 up of 3, and then we're going to come down into do a partial retracement of this nice move we had off the bottom there, and then continue up in an impulsive sequence like that. Yeah, something like that. So this is definitely a possibility, and it's really just going to depend how we look here on the substructure. I mean, right now, if I go into the hourly chart, hard to get a read off of this. We basically just went straight up. If you go in real close, you might be able to get a little 5-wave sequence out of this, but it's not overly clear. So really what's going to be telling is how do we react. And I'll also point out, so just doing a retracement of this overall move down from the all-time high to our recent correction low there. A 786 retracement came in at 29.05, so we basically just nicked that 786 retracement after going up here nice and strong, and we're backing off there somewhat. So if we can't get past that 786 retracement, then perhaps we have an X wave, and we're coming down in a Y wave for a double zigzag. So that's what I'm watching here. If we kind of correct down here a bit, come back up and get through that 786, then we have to entertain the possibility that we might just see new highs right away here. But until that happens, a little caution is warranted before getting, you know, really long or aggressively long, in my opinion. Now, but I mean, again, the underlying message longer term, we got 3 down after a 5 up. We're going up again. There's just no two ways about it. Just the question is, do we have a completed correction here? I mean, we didn't even quite make the 382 retracement. We didn't correct very much time even. So it seems inadequate in both price and time. So that makes me just question, well, are we going to have a more complex correction here? Are we not done here before we just go straight up? But let the market prove itself. If we just go straight up, then full bull, right? And then, well, what are we looking at? You know, we'd be looking at a wave 3 up, probably a really strong one, because this has been a, you know, if I go back here and zoom out a bit, this has been a very strong kind of resistance zone in the 2900s, almost not quite a triple top, but certainly a double top in kind of these mid 29s. So if we smash through that area again with some fury, things could really take off. As crazy as that might seem, that's really what the charts are showing here. Okay, so I think I'm pretty comfortable with basically where we are with the Elliott wave stuff. Bottom line is, whether this overall correction of this 5 waves up is done or not yet, the message is that whenever it is done, if it's not already, we are going to have to make new highs. That's a clear message for me. So that makes you look at things with a little bit more of a bullish bias, knowing that. Although still, I mean, never unabashedly bullish. You still have to be protective and manage your trades. But the point is, it's very important to know that that larger trend is still certainly to the upside here. All right. So with that being said, that's probably enough here with the Elliott wave scenarios. But we'll go to the Thinkorswim candlestick chart. And from a candlestick perspective, I mean, we've just blasted up here. Got well above the T-line, 3 T-line cross above the T-line, so bullish moving average cross. We're back above the 50-day moving average. So we've regained all sorts of technical levels. And just on this little consolidation here we've had in the last few days, we're still holding the 3 T-line, and we're still well above the T-line. So certainly nothing alarming here. No real candlestick sell signals here. This isn't actually a bearish engulfing. It almost was, but it didn't close quite low enough. And today we just had a doji day. So not much information there, just an indecisive day. And we are a little bit overbought here on the stochastics. So maybe that's an indication we need to have a little pullback here at least to cool that off. Get rid of that overbought condition. Now on the weekly chart, I thought there was an interesting signal here last week. So we had a nice big weekly bullish engulfing candlestick, and we engulfed 1, 2, 3 prior weeks real body. So that's a strong buy signal on the weekly candle there. And we closed above the weekly T-line, 3 T-lines crossing above the T-line. So certainly with these technicals, aside from the Elliott wave outlook, this is a very strong bullish signal, and certainly arguing for higher highs to come. And that's certainly in line with what I'm seeing there on the wave patterns as well. So no conflict there. Okay, that's SPX. I'll go to the Dow, have a quick look. Dow basically the same situation. The Dow did actually do a bearish engulfing candlestick yesterday, and then today a doji, but a slightly lower low for the move. So maybe this is a sign that we're just going to consolidate a little bit here. Maybe at least come down and touch the T-line, work off the overbought condition. And we'll see how that plays out here on the Dow. It's roughly the same picture as SPX though. Okay, now on the weekly, let's see if the Dow had the same kind of signal. No, so the Dow didn't quite open low enough to be a weekly bullish engulfing, but a very similar looking candle to SPX, but not technically a bullish engulfing. We are above the weekly T-line once again. We're about to get that weekly 3 T-line cross above the T-line, so that little bullish cross is about to take place. So very similar to, and again, we were oversold on the weekly, just starting to come off that oversold condition on the weekly, so maybe that's more important than the fact that we're overbought here on the daily. We'll have to see. Okay, so that's the Dow. And again, this is implying new highs for the Dow as well, if it follows along with the SPX, which it tends to. Okay, here's the NASDAQ composite. Basically the same thing. They all just did a 3-wave decline from the top. Now, a little weak here on the NASDAQ. We haven't actually gone as high relative to that decline that we did on SPX. In fact, we still have this resistance area here on the NASDAQ we got to get past. And that would be kind of the equivalent B wave high. That's 79.4623. So that's an area that we'd like to get through to have a little more bullish confirmation. Okay, weekly on the NASDAQ. Let's see if we had the same kind of weekly signal here. And we did. So we had a weekly bullish engulfing candlestick last week, engulfing 2 prior weeks, and now we're back above that weekly T-line. Now this week's still information, but it looks like we're doing maybe a doji candle or something. See how the week closes, but similar outlook here. All 3 indices pretty much lined up. Okay. Now, as far as the VIX goes, VIX certainly made a lower high, and that was a good indication that the indices weren't just going to keep tanking, and that seemed to prove accurate. But now we're coming up, or sorry, we're coming down here on VIX, but we're not making the new lows. We're making higher lows. So we gotta, all right, we gotta move up. We got a higher low, a lower high, a higher low. So maybe we're doing, I don't know, some sort of triangle here on VIX, whatever that means. But VIX not really giving a clear signal, so we'll just continue going with the indices charts there, and they certainly look like they're wanting to go bullish there. Okay, so that's VIX. Ideally, if indices really break out and start going up in a strong third wave and make new highs, you definitely want to see VIX just kind of collapse here, and it likely would if that happens. Okay, so that's VIX. Now we'll go to the VIX VVIX tool. After our last buy signal over here, getting above that blue moving average, had a nice move up. And it looks like we're just coming down, and now we're maybe trying to find some support on that moving average. There is a potential sell signal shaping up. And if you'll see here, so, okay. So VVIX, VVIX made lower lows here, right? And VIX made a higher low from basically the same reference points, right? So you have a VVIX VIX divergence. Basically, just one isn't quite doing what the other is, even though they normally basically trend in tandem. So whenever you see a difference there, that's a little heads up. Okay, something might be shaping up. And we are above the red moving average here on VVIX. So we have, step 1 and step 2 of a sell signal. If we do convincingly get below this blue moving average on SPX, that'll be a technical sell signal for SPX, and that might just signal that we need a little more consolidation from this initial move up off the bottom. But if it's a sell signal, then it can't be ignored. But within the context of where we are in the pattern, I would expect it to come down and make a higher low above that 27-28 area. But we'll have to see how it shapes up. Right now, there's no sell signal, but just the formation of one potentially. Okay. Well, that's probably good for now. Don't know if I'll be able to get a week or a video done at the end of the week here. Going to Iceland here pretty soon, so might not be putting much out for a couple weeks, but when I get back, I'll certainly get back at it. All right, Serial Trader signing off.